Welcome to Yap's Money Life Show. Thank you for your interest and your support. Today, I'm going to share with you a discovery that I have over my 17 years of practice. I hope you can learn from this mistake and avoid this mistake in your personal wealth management. You see, over the years, when we talk to the clients to do their planning or helping them to grow their wealth, one section that we talk about is always about getting them to give us their insurance policy that they have. So we never feel to be surprised by the clients, because we have clients who come in with a luggage bag of insurance policies. Some even come in the big plastic box of their insurance policy. And I think one extreme example that we've seen is that one client even put their insurance policy into a trolley luggage, and then bring the trolley luggage to Pigment's office. So, and in another situation also, we also see some clients, when we look at their financial data, they actually pay more than 200,000 premium a year for their life insurance. So you can see, without proper guide, people or every person can actually overpay in their insurance coverage, in their insurance premium. So in Pigment, what is our guide? In Pigment, we suggest that one should not pay more than 15% of their total annual income in insurance premium for insurance coverage. Okay? Because we realize that if one person were to pay more than 15%, say for example, somebody pay 25% or 35% of their total income, total annual income into insurance premium, they will have much less money for them to use it to invest somewhere else to grow their money for a retirement fund. Number two is that when you have excessive insurance premium payment, that is a very heavy commitment. So a lot of people say that I want to actually finish paying all this insurance premium payment before I retire. So that's why that will delay their retirement age. That's number two. So point number three is that when someone may insist to say that I want to continue, I want to retire anyway, but when you carry this insurance premium payment into your retirement, you will feel very painful to pay insurance premium payment whereby you don't have any regular income anymore. And the problem here that I would want to share with you here is that this problem of overpaying insurance premium is something that you can't really feel it when you are earning active income. Okay? But you will feel it very strongly when you are near to retirement age. So it was like 1 year or 2 years. Suddenly you will wonder, how am I going to find income to pay this 10,000, 20 or 30,000 of this insurance premium where I don't have any active income anymore? So that's why I would say that if we want to learn to grow money with high certainty, we should have the foresight. We should learn from other people's mistakes. Okay? We should also be at a very young age, learn how to limit our insurance premium to get just sufficient insurance coverage. Then we will have more money. Okay? We have more money to invest and to grow at a higher return, so that will help us to build a substantial and comfortable retirement asset. In this section, I will answer the questions that I received from the viewers. Okay, so now I have a question from Miss Leong. She's from Johor Bahru. Her question goes like this: should I invest in alternative investment asset class such as gold and precious metals, commodities or hedge fund to boost my overall returns? Now, my answer of course is yes. Okay, investment, as long as you use a proper investment measures, you will be able to actually get higher return. But my suggestion is that, my advice is that be careful, because whatever high investment return, it always and almost always certainly come from high risk that you need to take. So I would suggest 3 steps for you to follow when you want to actually invest into this kind of alternative investment. Step number 1 is to know clearly the risk nature of the particular investment that you're entering into. Say for example, if you want to actually invest into a hedge fund, you must understand how do they going to get the return for you and how volatile the investment is going to be. So anyhow, since it's a high risk kind of investment, you should always set a limit as to like 10,000, 20,000. So set a limit as to how much that you should invest into instead of like taking everything you have and then invest into it. Step number 2 is about selecting investment provider. What I would suggest you to do is that whether you want to invest into commodity fund, hedge fund, or gold fund, or precious metal fund, you should invest your money into investment company which is regulated by either Bank Negara or Security Commission. By doing so, you'll be able to reduce the chance of the company, the investment company, running away with your investment capital. Okay? Step number 3 is about best of breed concept. When say for example, you want to actually invest into a commodity funds, there are many commodity funds out there. You want to make sure that you select the better quality one. How do you do that? Basically, what you do is you look at the track record, the past performance of all these commodity funds, look at their volatility, look at what is the fund manager's experience and their background. So from there, when you select the better quality fund, better breed of commodity fund, you'll be able to make sure that your performance will be better when you invest into this alternative investment. So when we want to grow our money with high certainty, it's very important for us to refer into our strategic asset allocation. By doing so, we will be able to make sure that the total money that we invest into alternative investment is always less than 10%. Okay, so whether it's gold, precious metals, or hedge fund, you want to make sure the total alternative investment, which is high risk in nature, you keep it to be less than 10% of your total asset allocation. By doing so, you'll be able to tap into the opportunity of this kind of alternative investment. At the same time, you'll be able to sleep sound at night. If you want me to answer your most burning questions about wealth, about money, about investment management, feel free to drop me an email or WhatsApp me the questions. Now, I have a question from Mr. Subra. He is from Brickfield. He asks, how do you see the rise of Robo-Advisor and new fintech platforms in helping individuals manage their personal wealth? So, should we take advantage of this platform now? You see, this is a very interesting question. First of all, we must know that not all robo-advisors are the same. Okay? So when you evaluate an investment proposal coming from robo-advisor, we must try to treat each robo-advisor proposal differently, and we must evaluate them differently. Okay? Now, we must look at what is the benefit of investing into robo-advisor. How does it different compared to human fund manager? See, the benefit of robo-advisor is that it should cost less. It should charge you less, okay, compared to human fund manager, number one. And number two, it should be less emotional when it comes to investment decision making compared to human fund manager. Okay? But like anything, when it comes to investing, what is the bottom line? The bottom line is the performance. Okay? That is what counts. Okay? The truth is that robo-advisor, when they invest your money, they can perform well in certain sector, okay, compared to some fund manager. But in other sector, fund manager may perform better than robo-advisor. So it's very important for an investor like us to pick the right robo-advisor to do the right job in our investment portfolio. So we should treat robo-advisor as one of the many investment proposal, investment alternative that we have in the overall strategic asset allocation. You see, when it comes to strategic allocation, you as an investor still need to manage strategic allocation by yourself. If you need help, okay, you need a professional help to manage your strategic asset allocation, that will be human, that will not be a robot. Why do I say so? Because when you try to manage strategic asset allocation, there are so many qualitative and quantitative factors for you to consider. I think for now, only human can manage that better. Okay, so in short, when it comes to robo-advisor investing, it's just the same like any other investment. Put robo-advisor investment into the right place into your strategic asset allocation, then you'll be able to doing fine and you'll be able to grow your money with high certainty. Thank you so much for watching. If you want to learn more about how to grow your money with high certainty, please visit my website. If you like this video, you find this video is useful to you, please comment, like, and share. Have a great day. Hey there, if you like my video, please remember to subscribe to my channel.